Hello everyone, today is August 30th and this is Wyckoff Trading Course Part 2, Fall Semester 2022. First session, so we have, as usual, people that join us. By the way, as usual, stop the recording, read the disclaimer in full. All of the material that we go in this class is for educational purposes only. It's good to be back in the new semester after the summer. I feel re-energized. I'm looking forward to going through this course with you guys, WTC1 graduates. And as I mentioned, this is an open door, so we have guests today for those of you who are attending this class and you are still not a student, please sign up. We're gonna have a lot of fun this semester, lots of work ahead. If you have any questions, email us at wyckofassociates@gmail.com. Either Nancy or I could answer all of your questions. And please use this session, to study and to just go through the concepts that we're going to cover today and learn about the course. I think, this 2.5 hours that we're going to be together, hopefully you'll spend and extract some value from it. For those of you who will be signing up, we still have those people asking us certain questions. Don't forget to go to wyckoffanalytics.com, find the Wyckoff Trading Course Part 2, sign up. It's $19.98 for 15 sessions, $700 for the WTC alumni rate. You have to be an alumni of WTC to get that rate. My preference would be the payment plan, 3 recurring payments of $332.67. That seems to be more manageable. As usual, homework submissions, 1 file per homework, right? So I want to make sure that you guys don't send me like, different files, but we'll talk more about this because I want different file for the anatomy of the trade, right? So we'll talk about this in the second class when we're in a more intimate environment. PowerPoint, PDF, and Word doc. Don't forget that we want in the email your name, your first name, the first letter of your last name, the course, and then the homework number. So this is WTC2, so make sure that this is WTC2, homework number, and then obviously the homework. Just to supersede all of the questions about this recording, yes, we are recording this session. We will be posting it on our Wyckoff Trading Method YouTube channel tonight. You can check it out if you can't go through the whole session. That's how it is. Our classes live, yes, they are. Could you buy it on demand? Absolutely, you could do that. We have a lot of international students that watch the live class recordings the next day or within 12 hours. That's usually how long it takes us, to encode, to watermark, to do all of that stuff. Okay, let's continue. Oh, yes, Eric, thank you. Yes, most definitely. So now all of the classes are on Tuesdays. Eric, good eye. Thank you so much. So Tuesdays, guys, not Mondays. I missed the part 1 from Safian. Is it available on your YouTube as well? Yes, absolutely. Please go on our YouTube. It's a featured video right now. And enjoy that first class of WTC1. Okay. All right, so what are we going to study? Curriculum. So this is a continuation of the WTC1. This is the class for intermediate and advanced students. The whole purpose of this class is just one, to practice. You're going to practice in different ways. You're going to practice here. We're going to practice together in the classroom. You also going to practice at home. So each week you're going to have a homework. And the biggest value extraction that you could possibly have is to do the homeworks. And I'm going to try to force you to do as much as you can. If you can do the bias game, great. If you could do the anatomy of the trade, great. If you are going to do some of the exercises that I'm going to give you throughout, the whole course, and those are going to be something that we started during the class time, and then we have it as an assignment for your homework. Great if you could do that. If you could, we're going to do the semester paper. I'm thinking also about small presentations on David Wise's book, so that that also will be a part of our homework. So there are plenty of opportunities to go about this. This class, as any other classes that we conduct, well, especially WTC series, are going to remind you about college graduate classes. You have the material, you have the homework. WTC1 has an exam, and all of that stuff. So presentations, semester paper. So kind of like that feeling of coming back to school. So what else are we going to do? Obviously practice, as I said. What are we practicing? We are practicing the deeper knowledge and applications of that knowledge from WTC1. Lots of drills and exercises. Our concentration is on bias and timing. We will be talking about trading tactics and management a lot. I mean, like literally each exercise, we will be talking about how would we trade this? Where would be the point of entry? Where is the know-it-all bar? Where is the stop loss? How do we move it? And so on and so forth. So lots of kind of like bias games, sequence exercises, exercises on the recognition of the character as well. So quite a lot of interesting stuff. Scenario building, trade management, risk management to a certain degree, some exercises on the selection, phase behaviors, different variation on the volume signatures, trend recognition and analysis. So this is going to be a big thing as well. And then some of the modern tools that we're going to use and incorporate, and you guys are going to do a lot of work on that and kind of show us like how you do this and how you use it. But there is also some additional information that is not on this slide. So we're going to study significant bar technique, which is a proprietary technique that I've developed for hedge fund consulting hedge fund managers. This is going to be just a kind of like a bar by bar analysis with all of the significant bars and tests in the construct of the swing and in the construct of the trend. There are quite a lot of information there. We've developed it pretty deeply. Then swing analysis. This is something new in the last 3 cycles. We've been talking a lot about this, and together with students, we've been developing these techniques to the point where students are codifying some of the stuff, so which is going to be also homework, so something very interesting to look forward to. Then also different types of analysis, bias analysis. And this is something that I'm extremely proud, to present as we've developed it here in WTC2. So WTC2 class for us is our R&D laboratory. We develop a lot of new techniques in this class. So it's always exciting because you never know how the whole course is going to end up, where we're going to finish, what's going to be developed, and so on and so forth. So I'm extremely excited. And here we're going to talk about 3 types of bias analysis. And bias analysis is just basically how do we go through the trading range, and what is it exactly that we need to look for? What is the sequence of that analysis? So I'm going to give you a sequence of the analysis, and I'm going to give you that sequence of the analysis in 3 different ways. We're going to call one a sequential analysis. Second was one flashcard analysis. And third one is quantifiable analysis. And I think I'm just going to leave it at this. I don't want to give out more of the information in the free session, so you'll have to sign up. But by the way, for those of you who are interested of signing up for this class, the prerequisite for this class is WTC1. And I know that for some of you, you might be, talking to me in your in your head right now. Well, why would I have to take a prerequisite? Because you have to. You don't have enough knowledge to come to this level. And then you're going to say like, well, I've studied Wyckoff method here. I've read this book. I had classes from this guy. I had private sessions from this coach and so on and so forth. Not enough, unfortunately. Yeah, I mean, like I would love to have as many people in this class as possible, but it's just impossible. We've tried it many times before, and every time I get frustrated with people who say that they know Wyckoff methodology, and then they come to WTC2 class and they do not know, or they do not know our semantics, our analysis. We've definitely advanced the method, to a very big depth. So it's just not enough. Plus, all of the people like that overcame their mental hiccup of like, oh, I'm not going to do this, and took actually WTC1 course. They came back and all of them said, thank you for pushing me through WTC1. I would not be able to do it, if WTC2, if I wouldn't have done WTC1. So just something to think about, and I'm not bragging or anything. I just want to be very realistic. Don't want to waste your time, and especially don't want to waste my time and the time of the students in this class answering basic questions. Okay. First time attending, how do I remove this cover box for sound to be able to see what is taught fully from Moses? You should be able to see the video right now, Moses. You should be able to see my slides. So if you don't, please, just go through your computer and open applications and find the go-to webinar, and you should be able to see that. I hope that you can find that. All right. Okay, let's move on. I mentioned WTC1. Well, here's the curriculum for WTC1. I mentioned that you could watch the session on YouTube, session number 1. Sign up at wyckoffanalytics.com. Again, 15 sessions, full semester. What do we study? Market structural analysis. We're going to talk about the change of behavior, change of character. Very, very important concept that we kind of cemented in the way of how it's being taught, how it's being presented, visualized, what kind of character of the price and volume actually, and how the structure should develop during that transition. And usually that transition occurs in multiple spots. It's not just, let's say, going from a trend into a trading range. There are interesting changes of behavior that happen during the trading range. I mean, like this whole latest rally in the market was a change of behavior, but did we have a change of character after that? So you will have to find out. We'll talk about different price structural environments, trending, non-trending, different trends, different characteristics of those, Wyckoff events and Wyckoff phases to identify the timing of how the trading range unfolds and when the price is ready to leave the trading range. Extremely important, fundamental, foundational Wyckoff knowledge. And then price and volume, supply and demand analysis, mostly going to be based on effort versus results. So this is something that we would go very deeply in, and whether this is a bar by bar or swing by swing, the same type of thing. We will be studying this in a lot of details. So as I mentioned, bar by bar, swing by swing analysis, historical analogs, volume patterns, and so on and so forth. Relative and comparative analysis, just 2 sessions, just because you guys are too good for that. All of you know what this is, but regardless of that, I'm going to go into the basics. I'm going to dissect to you how is it that the relative and comparative analysis was used and is used right now. I'll show you different techniques on that associated with filtering and scanning, and also I'll give you a little bit of the proprietary sweet spot in concept information on the potential outperformance on the next rally reaction, and we'll talk about this later. Session number 14 is the trade management. This is like the start, the prelude to WTC2 trade management and tactics. And then session 15, as usual, in WTC1 course is going to be session on your questions. Okay, today we're going through the introductions. Then we'll go through. We'll talk about the homeworks a little bit later on. As usual, in each session, we go through the market update. How do we see the market? I usually go through 8 major assets for us: market, gold, Bitcoin, oil, and 10-year yield. We'll talk. You will see this in a second. You'll participate a little bit in that. Then we're going to go into our exercise number 1, which is on observations and deductions. And it's kind of like a fun intro into exactly what we're going to do the whole semester. Just like put the chart on, I'm asking you questions, you give me the answer, and we go from there. And then the bias games. So today we're not doing any of the anatomy of the trade. I'm going to reserve this for the students who have signed up for this class already. So we'll start, I'll give you instructions on the anatomy of the trade in the next session. But today we're going to go through some bias games because the last semester ended July 7th, 8th, I believe. So we have quite a few weeks to cover. So we'll try to cover, 2 to 3 bias games each week. I would suggest that for the next week, you guys look at the bias games number 150. You could find them on our website or on Twitter if you like. And obviously, it's better to go to the website and to do the bias games, without looking at the solution. I mean, like, obviously, we want that, right? So we want to understand our level. And again, I'll talk about the bias games more. We'll start looking into that different types of analysis, bias games analysis. And in the next session also, as I said, anatomy of the trade. Okay. So this is 150 to 152. So here is your homework for next week. I'm going to give you 2 articles. One is actually a chapter from Malcolm Gladwell's book, Outliers. And this chapter is on 10,000 hours that we need to do in any type of practicing of the craft. So we'll talk about that. And then the second article is called The Mundanity of Excellence. This is an article about the qualitative practice for Olympic swimmers. And we're going to analog that to trading. So your first homework is to read those 2 articles, and then in the next class we'll discuss how does that pertain to your practice, how does that pertain to your pathway to become a successful and consistent trader. Also, I will show you some of the work that prior students have done, making some calculations on where we are, where they are on this path. It's kind of very exciting to see where people are. So, second class is going to be very exciting. Those 2 articles are already posted on our pages, the class pages. So, go check those out, and you can start reading those. And then again, bias games 150 to 152. You could find it on our website. Please do that. Anatomy of the trade, I will explain in the next class. You will all receive, as usual, the access to the class. Instructions how to access the pages tonight, I believe. And again, also for those of you who are guests, yes, this session is being recorded, and we will post the session tonight as a complimentary session on our YouTube channel. All right, let's do the market update. And I guess my first question, as usual, what is the trend? So let me see the answers to that. And I wonder if we're going to change the answers a little bit from WTC1. Okay, and I kind of see that maybe not. Okay, bearish, down, down, bearish distribution, Short-term bearish. I think Eric is going with that somewhere down. Okay. So as you keep kind of like piling up all of these answers, my next question is: if you say down, if you say bearish, what does it mean? Is it a long-term bearish? Is it an intermediate-term bearish? Is it a short-term bearish? I mean, you gotta be more specific. If I'll ask you what kind of trend we are in right now, I mean, like, do I mean 1 minute trade? I'm sorry, the 1 minute trend, the 1 minute time frame, or do I mean something like of the long term out of the 2009 low? So let's do this again. What is the long-term trend? And I would say that the long-term trend to me is defined by the 2009 low. What is the long-term trend? Still up, bullish, long, up. Okay, now we're getting somewhere. This is so unusual, right, to see that some of the trends are still up. Yeah, there was no break. If we break this support and we commit to the downside and we can't recover, that would conclude the extent of that trend since 2009. What about intermediate trend? And I would say the intermediate trend is everything in 2022. Bearish, downtrend, bearish. Yes, I would agree with that. Our initial call for this to be the bear market was here, confirmation came here, and then every other thing that has happened with this downtrend in different structures, it was just basically confirming it. Even the rallies. We'll talk about the latest rally in a different light, but let's say like we caught this rally right here, and we said that this is going to be the best rally since the beginning of the downtrend, and it's going to go into the upthrust, which has happened, and then we're going to continue with the downtrend, which we did. And then we'll talk about the most recent rally right here. Okay, how about a short-term trend? And with the short-term trend, this is the last, or rather current, swing. What is the current swing? Is it up or down? Down, of course, yeah. And here's the whole kind of like picture for us. Here we are. Long-term since 2009 low up, intermediate during this year down, as we have lower highs, lower lows, and short-term trend, which is the current swing, which is to the downside. Why does break of June lows and the major bull market from Jeff? Yeah, so let's quickly look at that and address this question. So we kind of could see how the stride of this long-term trend creates an overbought condition, overthrow. We also have the line right here. And actually, I would say that in a way, Jeff is right. I mean, like, if we would be thinking about, let's say, these two lows, they're extremely oversold lows. Like, this is an extreme oversold condition, And it's just very logical that they are, right? Because you have 2009, full depression of price, of 2007 high. And then obviously COVID, a very rapid, big decline, into the same vicinity. But I was talking more about like this low right here. I would say that we probably would be confirming, if the break happens here, we probably might be confirming that in a way, at least the rally, since the COVID low into the high and then into the current structure is confirming on this breakdown that we're gonna be in the much more extended bear market. That's number one. We still would have to see, could we stop like at 3,000, 2,800 and do the same as we've done in 2009, 2000 and at the COVID low. This is something that we've talked about in WMD classes, but something that maybe I'll have to come back and just kind of like think this through a little bit more. But this is the long-term picture. So yeah, Jeff, thank you so much for this clarification. Okay, let's go now to the most recent price action. So we were identifying the rally early. We said in this area right here that we're gonna have the rally that is gonna be the best rally. We had to go through the capitulation, short-term capitulation decline on the CPI news. So this is a very news-driven market, right? So this was actually this bar right here, Fed. This is Fed again, and you kind of could see what those macro catalysts are doing, right? So they are triggering the selling. They are showing the directionality, at least short-term and intermediate-term directionality of the market. So we can't ignore the news, or rather the reaction of the market participants to those news. And what do we see in the latest decline? The most important bar right now is this. Jerome Powell talk, and what do we see technically? First of all, we are coming back under the downsloping resistance. We are breaking the support. We are extending into the close and into the low, away from the support. And that's very important. And we do that on what kind of volume signature? That's pretty significant, right? So this is the highest volume signature since the test that we have had right here. So everything is going really well here on the way up, except for the loss of momentum on the last leg. We're seeing that demand is diminishing, and that produces that loss of momentum, a little bit of shortening of the thrust. And I thought that at that time, actually, I mean, we actually were thinking that the rally was pretty bullish. Why? Well, first of all, from the deeply oversold condition, after the local, climactic event, after the testing, we're starting to rally. Look at the reactions; they are so small. Even this reaction was pretty healthy in the construct, of the whole rally. And there was an idea that we might just stop here and kind of like, create some more testing action and then continue to the upside. But obviously, this Fed bar, um, breaks the whole pattern, and therefore uncertainty in the marketplace. You can't really be thinking that you could be 100% right all the time. No matter how much you think of yourself, and no matter how you truly are an expert in this field, you're gonna make mistakes. And the biggest thing, with the Fed is that it really drives the market at certain places. I would say that it drives probably the market more. There is more reaction during the times, the downtrending times that we have had, this whole year. The impact of the message from the Fed is much more significant, and we kind of see that, right? So we see this bar right here, we see this most recent bar right here, and they're the either continuation of the beginning of some kind of down move and so on and so forth. So we can't really neglect this, and we can't really ignore this. But what was also so bullish? Let's just continue developing characteristics here. We overcome this resistance, and this resistance is extremely important. Why? Because first of all, this is where the beginning of the news on the CPI, beginning of the move on the CPI news started. That's number one. Secondly, we had the resistance here, initial resistance. It did not allow to develop the change of behavior right away. We have the stopping action here in the downswing. We have the testing action after the spring. And we also overcame another level. We overcame this level right here, which was again Fed news. testing, spring, and then the selling climax, the first intermediate selling climax. So this is a very important zone or cluster, the resistance cluster. And look what we've done. We actually went through this. We came here, there was no supply. Supply was actually diminishing, bullish. So just continuation. Yes, we're losing momentum here because there is less buying, but look at how there is no selling either, and that propels the price above the downsloping resistance, above the horizontal resistance number one, above the horizontal resistance number two, and where to? Into the one half of this trading range. So sometimes, as I say, change takes time. We might not know what the ultimate bias is of this formation. We still think in terms of a very much established thinking that we are in the bear market. We just had a rally, which we called, and we said that this is going to be a change of behavior rally. What comes after the change of behavior rally, guys? Change of character, Martina is saying. Yes. Testing. Yes. From Eric, Betty, Michael. Yes. So we need not only to produce a change of behavior rally for the bullish scenario, we need to produce now some kind of test, which is the reaction, which is going to be different, right, from all of the reactions that we have had before. And specifically, what reactions? Well, this reaction, it has to be somewhat different. And therefore, scenario number one, let's say like bullish scenario number one, and don't think that this is the like prioritized scenario or anything. I'm just kind of like going through different scenarios here. If we could stop somewhere here as a high or low, and then start recovering and create some kind of deep last point of support, that would be extremely bullish. So maybe like stop somewhere here, right? And then continue to the upside. Then under this scenario, right, we would be thinking that we are in a big trading range. We just had an upthrust action as a minor sign of strength in phase B. And then we're going down for the ultimate, phase C in the potential reaccumulation. So this is bullish scenario number one. Bullish scenario number two is not fully materializing, right? So we thought that, okay, this was not that damaging. The supply did not increase that much on this reaction. If we would have stopped, and this price action right here seemed like, yeah, maybe we could do this. If we could have stopped like this, test, and then continue to the upside and have this type of stride, that would be that second bullish scenario. Now, is there anything that the market could do here to still get back on the track here with this scenario? Yeah, it can. Why? Well, let's observe the volume signature here on the last 3 bars. So obviously, a lot of supply is coming in on bar number one. And bar number one has the expansion of the downward effort combined with extension of the downward result. So this is the situation where we see the synchronization between effort and the result to the downside, and therefore this is bearish. So after that bar, what do we expect? We expect some kind of continuation to the downside, a follow through to the downside. Next bar, bar number two. This is a small bar. So we are seeing that even though the effort is slightly decreasing, but look how close it is. So I would say that, that decrease in effort on the volume signature is insignificant or somewhat insignificant. So I would say that for bar number 2, downward effort slightly increased or somewhat the same, close, but the downward result has decreased significantly, right? Because the downward spread has decreased significantly. And what does it tell us? Usually it tells us that there is a presence of the opposing force, meaning that there is a presence of the demand. And yes, yesterday on the intraday level, we saw some attempts, to rally, and we couldn't rally. We couldn't sustain that rally into the close. So that inability to sustain that rally into the close suggested that we're still weak. And that was the comment yesterday in WTC1 course that, yeah, we're still weak. Bar number 3, the spread on bar number 3, if we would be comparing it to bar number 1, so let's just do that. So let's say the downward effort of bar number 3 compared to the downward effort of bar number 1. What could we say, guys? Definitely increasing, right? So there is more effort to push the price down. Yet the downward result of bar number 3 relative to the downward result of bar number 1, what happens there? Diminished result. Martina is saying result is diminishing. Yes, significantly less from medicine. Michael less, Eric less. Okay, so what does this mean? We're spending more effort to push the price down, and yet what happens? We can't really produce the same downward spread, and someone is buying. So there is an opposing force here that is increasing buying. So buying is increasing. Now, does it really mean that this is the stopping action for this particular reaction? I would say that maybe. I wouldn't say yes or no. I would say maybe. Why? Because this is pretty vertically down. I mean, like if we would be comparing especially the last 3 bars with the rally itself, I would say this is just too aggressive to the downside. Now, there is also a comparison that we could make here of this reaction to how this CPI reaction unfolded. I mean, obviously not that aggressive, not that vertically down, but close. I mean, like this bar right here is just on par with all of these 3 bars that we have had back in June. So it's almost like, yes, demand is coming in. Somebody's buying something. And we would have to go to the industry group level and stock level to see what is being bought. It doesn't necessarily mean that we're stopping right here, but we're just acknowledging that the buying is happening. We're also acknowledging that the character of the reaction has changed. And therefore, is it possible for us to stop right away here or maybe come to the next support? Could we stop here just like into this cluster? Yes, we're very close. And this is, a breakout bar of importance. So that would make sense that maybe there's some kind of stop in action. So we'll have to kind of wait a little bit and see if the incoming demand could possibly stop the price action, could possibly start reversing it, and then we'll talk more about the characters of those 2 reactions. How does this reaction compare to the previous Fed decision? Okay, from Shamshir. Okay, so we are talking about this reaction compared to what? To this, Shamshir, right? This was the previous Fed reaction right here. Yes. Okay. I would say the composition is slightly different because the Fed announcement came here. The initial reaction was to the upside, and then we reversed the next day, and then we go down. So the reaction here starts, in a different way. Loss of momentum. We have a very bullish kind of character to the reaction first, and then in the middle of the reaction, right? So we have that Fed announcement, and the reaction right away is more negative. So I would say that for now, it looks a little bit more bullish. The current reaction looks a little bit more bullish. I'm just looking at the spread and verticality and how just the price moves to the downside. There is a rally right here, an attempt to rally for 2 days, 3 days. There is nothing of the sort here. So this is weaker, and this is slightly stronger. So that would be my comparison. Okay, let's go somewhere else. I want to come and look at Russell, because when we look at Russell, the picture is slightly different, right? So we have this is our trading range, right, with the upthrust, and again, look how deeply it penetrates the structure, the previous structure. So it's not just one half, above one half. And then secondly, and look at all of the selling that we have had. Look at the volume signatures here. And I mean by when they were really, really selling. Look at the most current selling. What do you guys see here? What's happening with selling, with the most current selling? Less selling, yeah. Yeah. So we just need to make a note of that. We couldn't stop here, which was a very logical place for us to stop, right? So how many times have we done so? That many times, and we couldn't. And usually those type of resistance support lines that are very meaningful are gonna be very hard to overcome unless supply is exhausted. Like right here, there's no supply there. And it usually would happen on some kind of news. So news would drive the price through or away from those points. So we could see how all of the 3 news-related items are here. But if I would be looking at Russell and I would be just looking at the rally, and then let's say that we have a stop in action here, and then compare the rally to the reaction. The rally is definitely still not as strong as the rally itself, especially in Russell, because it was outperforming, especially looking at the volume signature, which is significantly lower than any of the previous selling attempts. So we kind of have to see where would we stop, and would we stop and reverse, and then we would start thinking about the testing of this current reaction. Okay. Why have you drawn the trading range as an apex on Russell versus the S&P? You have drawn the channel. Yeah, I was just kind of playing around with this a little bit, Martina, and this is almost like a wedge, suggesting shortening of the thrust. And this was important as 3 levels of touches, and this was important, this was important, and this was important. So it was a little bit, kind of like, let's play with this. So that's how I drew it. But good eye catching that. Okay, let's go somewhere else. Let's go to the 10-year yield. We are in the trading range, as we've been talking for months. Climactic stop in action after the trend is done. We said right here that this is a change of behavior type of reaction. We said here that we're going to have some kind of rally based on what? Based on the diminishing spread, diminishing volume signature, and not overcoming the support. The rally was pretty bullish with the very distinct extension on the upthrust. So I would say like this is an upthrust, and I would say like maybe even an upthrust action. That's how bullish that was. And then another change of behavior right here that again stops at the support. The next reaction penetrates the support, but look at the aggression of that penetration. So there is really not a lot, and we could compare it to this. There is really not a lot of aggressive selling below 2.7 on the 10-year. And then look at the recovery. Quite a few up bars that have a lot of momentum, a lot of buying, then a breakout bar again, and we're holding. We're still holding right here. Our call before we went on this last vacation was that the price will come to this level. because this is where the break has happened. This is their original breakdown. So the price needs to come back and retest this particular area. So far, holding well. Even though supply is coming in here, here, and here, we're holding. So that whole thing right here is putting pressure on the market, obviously in line with Jerome Powell's comments, with the Fed policies, to still keep the qualitative tightening intact, meaning that they're going to increase the Fed rate again. And let's just kind of see how that's going to develop, because if there's going to be another attempt to, let's say, go to 3.5 on the next rate hike, or prior to that, obviously discounting it prior, to what has happened, like we have had it here in June, right? Then I wonder what's going to happen here, or could we just be rejected here? And these are two different scenarios, so we would have to see exactly what is happening. But again, holding here, still holding. Okay. Some supply came today, though, so hopefully that might be in line with, could we possibly stop in the marketplace because of all of the buying that we have had in the last couple of days. Okay, let's look at energy, specifically oil. So here, as you guys remember, the infamous call, touch of 60 by the end of summer, obviously not going to happen in one day. So, but I'm still very proud of this analysis, because where did we say this? We said it here. So can you imagine kind of like knowing the roadmap of how the price is going to unfold? And again, the timing of it was actually okay, I think, now thinking back and seeing how the structure unfolded. So let me just walk you through this. Climactic run, stop in action as a buy-in climax, automatic reaction as a change of behavior. Everything pretty classic here. There's really nothing in phase A very surprising to us, and so on and so forth. Then we go into this period right here. Now, this is a very, very important price volume action. So someone might say, like, well, it's just phase B. Yes, correct. Phase B for sure. But look at the volume signature. What is happening here? Relative to what? Relative to what has come before. Volume is significantly down. And not only that, the duration of this period where the volume is so low is significant. So what does it mean? And this is a very, very important concept. I want you guys to kind of like listen in and pay attention here. This is in a period of inactivity. I'm going to add here institutional inactivity. We see this from the volume signature. We could extract from the volume signature and the price action the intentions and the sentiment of different market participants. Wow. Ooh. Explosion. Mind explosion. How's that? Wouldn't we be thinking about the sentiment in completely different terms? Well, we kind of creating the body of knowledge on the behavioral market analysis. Behavioral market analysis is the extraction of the sentiment of market participants based on the price in volume structure. I love that. There are periods of inactivity where institutions just don't know what's going to happen. They don't want to take that risk. So their models cannot predict, calculate, extrapolate the correct roadmap as to what's going to happen. And I remember during this time, everything was so bullish. People were saying like, okay, we're going to go to 130. We're going to go to 200. We had those type of calls as well. But our call here was pretty simple. We said that we are observing already a distributional pattern, which we call a TP formation. A TP formation has multiple points of interest to us. First of all, speculation on the way up as the climactic run unfolds. Secondly, urgent selling on the way down. Thirdly, inability of all of the rallies to touch the buying climax high. Fourthly, a period of inactivity, and that's a big clue for us for the TP formation, and that is the institutional inactivity during phase B, and forming some kind of apex formation in that phase B for the resolution of it into phase C and phase D. So all of that kind of was seen in that moment in the end of April, beginning of May. And that's when the call was made. And we said that first, we're going to have a rally into the upthrust. There were quite a few upthrust, and that's probably, something that was a little bit frustrating for me to have so many upthrusts. And now thinking back, reflecting on this call, not on the call itself, but on the execution of this call, because I had some trades here. Having those 4 upthrust situations and the last one upthrust after distribution now seems to be evident. Now seems to be kind of logical. Why would I say this? Well, this is all strength. So in the strongest structure, you are going to have multiple attempts because of that strength to go up and then down, up and down. And I think that the key for us to note there is the diminishing demand, right? So for instance, if we take just the local demand right here, this is the area of interest for us right here, where demand has exhausted so much, suggestive that if supply is going to come, oh boy, this is going to be a little bit, kind of like easy for the supply to start pushing the price up. Supply comes in and still we are thrusting in it. So this was the bar where we said like, yeah, now we're going to go down. And here we are. So from there, supply is increasing. We're feeling good about the call, hoping that 60 is touched by the end of summer. Multiple breakdown bars that are of importance. Today rather, there was another one. And look at the volume signatures on those. So here is one, here is another, here is another. That's the one, and this is today's. So we're seeing how supply, since this bar has been increasing, then it went down, and now it's kind of like starting to pick up again locally. And what does the price do? So as effort increases, the price is doing what? We are negating the yesterday's bar, which was a breakout bar, and we're closing below it. Reversal. So we kind of have to start thinking about the structure right now. Because if we truly think that this is a distribution and we are in phase D currently, then what are we experiencing? We're experiencing a trading range with a minus sign of weakness in the middle, which is also bearish. If this is the rally, I mean, like if this is the true reversal and we don't go up from here and we continue to the downside, that's a redistribution, confirmed redistribution. And then we could have the whole causality here confirming, let's say, this count right here. Could we do that? This looks more like an LPSY that it is. This looks more like return to the eyes or the prices under the eyes, even though I don't necessarily like this concept, but it's very applicable here. So we still might see that 60. I mean, obviously not in one day, and obviously, it's going to take some time. But if this is the most exciting rally in this trading range, then we are done. Yeah, that's it. I mean, like, look at all of these rallies. This is the best rally. And we know where the best rally in the redistribution comes. Into the second excitement by weekends. So we'll have to see that. If that happens, we also will have to change the stride a little bit. This would be the stride, maybe slightly different, maybe something like this. And we'll have to see, maybe like this. I'll have to play around with this. And then at least we can go to like, high 70s or something like that. Okay, very interesting. Today's price action, so we'll have to understand what's going on there. Is there going to be a continuation? Let's go to gold. So gold is, somewhat dull and uninteresting, and it looked like, yeah, we're going to have this change of behavior, but we said that this change of behavior is just for the local trading range. This is our local trading range. So we are in the local trading range. How do we trade those? Preferably short-term swing trading, preferably intraday trading as well. And then the bias of this trading range is going to be of utmost importance. Now, we've done so many bias games with you guys. What is the first thing that we look at when we look at the chart, when we look for the bias of the trading range? History, Michael is saying. Specifically what history? Not necessarily analogs. Lead in, yes. Well, Michael, I'm kind of like pulling the teeth out of you. Like, what is it? Okay, major events, background. Francis saying background. Yeah. What is the background here? That's the background. So our original thought on what kind of trading range this is to be confirmed or to fail. Redistribution. Yeah. Plus, look at the verticality of this whole thing compared, let's say, to this rally. Much faster to the downside than to the upside from the same spot. So we still have to be very, very disciplined in the sequence of our analysis here. The background is still to the downside. The most immediate background is to the downside. Yes, we had a change of behavior that suggests a trading range. Now we have to assume that we are in the redistributional trading range to be confirmed or to fail. That's what we're doing. That's what we're looking for. And that's probably all on gold that I could say. There was a question that I missed here. Jeff is asking, did you have a profitable short trade in oil? I'm struggling converting the academic knowledge learned here into a growing account balance. All right, Jeff. Well, I think that you are in the correct class right now. Why? Because, WTC1 is all about knowledge. WTC2 is all about how do we execute the trades, drills that we go through. I always tell our students, accumulation of knowledge is hoarding. It doesn't mean knowledge is not the skill. It doesn't mean that you can trade if you went even through WTC1 course, or if you keep reading the books, keep listening, to presentations and so on and so forth. You need to actually, go and, when you buy a car, imagine if you bought a car and you have the first initial instructions. Okay, so this is how the car works. What's below the hood? Why does it work? Well, there is a fuel combustion engine right there, and it pushes the wheels, and you could increase the speed or decrease the speed. The way how you increase the speed is you push on the accelerator, or you brake to stop. Right? This is knowledge. You're not really driving when somebody is explaining to you, and you're a beginner, complete beginner, or just even you've seen the cars on the road, but you've never driven one. And so that's how I'm comparing WTC1, to that. So then WTC2 course is more like, well, let's get you in the driver's seat, and now you start driving. And let's just see how that's going to unfold. So practice. Remember when you started driving, did you drive right away really well? Well, there are some people like that, of course, yeah. Very rare though, right? Majority of us had to go to the some driving course, and have the instructor, or let's say my father taught me how to drive, and I remember I was getting the car into the garage and I hit the door. So you're gonna keep producing even when you practice the trades that are gonna be losing trades, and you might not even understand like what is going on. So this particular course is gonna be great because you're gonna be practicing, and then in the anatomy of the trade, we're gonna be figuring out like in this particular trade, what did go wrong and what did go right. How could we correct all of the wrong things that we're doing, our behaviors that led to this loss, and how could we overemphasize our good behaviors in trading? So Jeff, really great question, and hopefully I'm giving you a good analogy right here. Francis saying yes, good analogy, on where we are with this. And you could always reach out to me and kind of like ask this question as like, okay, this is what's going on with me. What do you think? And so on and so forth. So obviously for students in the class, I will step in and we'll figure it out. Okay, moving on, and this is the last coverage of the market, Bitcoin. So the background is still to the downside. Let's not forget this downtrend. And then we said that this is probably the lowest low point for a while. This was the most important bar. It still is. Look at how we can't really overcome this bar. Multiple attempts. 1, 2, 3, 4, 5. And we still cannot do this. I'm not sure if this will stand, being the lower low, but maybe. Until this bar right here, we probably had a slightly better chance. I think that the whole deterioration has happened right here for the latest decline. We've talked about this in the tape reading lab with William as to how this reaction is showing some increases of the supply, and then the subsequent rally is showing diminishing demand and diminishing momentum to the upside, which suggested reaction. Well, here we are in that reaction. We break to the downside through the support quite significantly, and that break was suggestive that we're going to see lower prices, where to probably break this level. We've done this, and demand was suggestive again of the continuation. But look at what's happening lately. First of all, how much here we have extension to the close, the breakdown. How much of that extension do we have on the next breakdown bar into the close? Do you see what's happening here? Shortening of the thrust, yes. So, and diminishing selling. We do not go further down. Demand is increasing. Look at how this demand bar is the largest demand since this, right? We are not expanding the result to the upside, but this demand bar is interestingly better than any of this or even this. So again, as with S&P and the markets in general, do we see demand coming in? Yes, it's there. Could it produce a result? Limited result for now. And could we test this demand? We did so today. So what kind of test did we have today? Did supply increase? Most definitely. And what kind of result do we have on this testing bar? What do you guys see? Bullish buying, small result. Yeah. So we don't commit to the downside, right? On this type of supply. Like it's a high supply, like 1, 2, and 3. This is the second, and it's close to what we had at 1. Almost equal. right? So how is it that on this bar, let me just kind of rearrange this a little bit. Bar number 3, 2, and 1. 1, 2, and 3. I mean, like, look how close 1 and 3 are. So there is at least an attempt after the limited breakdown to come back into at least this area right here, I think. And then we'll have to see what's going to happen. Now, for us to like make this statement, what statement are we making? We are making the statement that demand is present and it might potentially try to create some kind of rally. This rally could happen. So we need to wait and see if we're going to have some kind of rally attempt here, or we are failing, and then we're going to, if we're failing here, and this is just a trading range, so let's say like we have one bar to the upside, everybody gets excited, and then suddenly we reverse. If we reverse that suddenly, we're going to retest this low. And not only that, a sprint situation could be in place. So, all right. So that's our Bitcoin. It's going to be interesting to see how this structure unfolds throughout the semester. Okay, so what else? I think that's it. Okay, 407. All right, good. Let's come back to our slides. All right, market update is done. Again, for those of you who are guests, and majority of you, I just see by your names. You guys, you know, I see your names. I know your names. So majority of you are our students. But for those of you who are guests, yes, this session is being recorded, and we will be posting it tonight on Wyckoff Trading Method YouTube channel. Speaking of the market update, I thoroughly enjoy our discussion with Bruce Fraser during our Wednesday classes, Wyckoff Market discussion classes. This is where we go through the application of the methodology. So we go through the market analysis in depth. We go through the top-down approach. We look at the sectors. We look at the groups. We look at the stocks. Bruce is a fascinating storyteller and is an amazing Wyckoffian. He's been teaching this material for quite some time, and just, you know, a colleague and a friend. I always enjoy having the sessions with him. Each Wednesday at 3 p.m. Pacific, so check it out. Also, want to remind everybody that Bruce is a publisher of a very, I would say, and I would not be even afraid to say this, famous and popular, probably popular Wyckoff Power Charting blog on stockcharts.com. Check that out. It's completely free. Despite of all of my struggles with Bruce not to publish such a valuable information, he did so. So you could just study Wyckoff method through his blog, and it reads like a book. So we have this as a required reading for all of our students, and I would highly recommend you finding that material. Another spin-off out of the WMD classes, the Wyckoff Market Report. Johnny Scan, our own student who has become a content contributor, has come up with a lot of ideas on scanning. And the uniqueness of John Scans is that he's scanning for Wyckoff structural events. So not only the newsletter is going to give you a watch list on the weekly basis on Friday, and you could go through that watch list. And that watch list is being constructed by Wyckoff events. Okay, here are our Wyckoff sprints. Here is our Wyckoff upthrust. Here is our backups or breakdowns, and so on and so forth. You could also judge the health of the market by those scanning results. So pretty fascinating. Check this out as well. And now let's talk about, before we go into the first exercise, let's talk about observations and deductions. Why is this so important? Because those are the two skills that we need to have as analysts and traders. We need to observe the market participants' behavior on the chart correctly. And then we need to make correct deductions about what those market participants' intentions are. We convert those intentions that we see on the chart into the bias, time, and character, and sentiment as well. So you might say, like, well, what's the problem? Well, here's the problem. Look around you, where you are right now. Maybe you're in some kind of room. I'm in the office. So in my office, I have thousands of different things, whether this is furniture, books, shelves, blackboards, computer equipment, so on and so forth, plants, this and that. Can you name all of them? Can you remember that you have all of those things in your office, in your room where you are right now? Do you remember the color? Do you remember the size of those things? Do you remember where all of them are located? Do you remember the content of them? And most definitely, none of you will be able to name all of the things that surround you and to enlist all of the characteristics of those things that I've asked you. It's just because our minds are somewhat limited in accepting the information. And when you look at the chart, it's kind of like that. The chart has a lot of information. When you look at the chart, you might be looking at, let's say, like a whole year. So you might have around 220 bars. Each bar has an open, close, high, and low. It also has volume signature associated with each bar. This seems to be like our primary data information. And time, of course. Yeah, so price, volume, and time. There is a secondary information, and this is kind of like what we observe. Okay, if this is the close, what's the extension from the previous close? What is the extension of the close from the open? What's the difference between the close and the high? What's the difference between the close and the low? What about the open? What's the difference between the open and the low, the open and the close, the open and the high? What's the directional bias of this bar? How much effort and volume was associated with that particular bar? How much effort difference between, let's say, the last bar and the current bar do we have relative to the expansion of the price? Did we break any of the significant resistance support levels? Are we in some kind of price structure, some cluster of bars? And so on and so forth. I mean, like, I can go on and on and on and on. So this was what I'm calling secondary information, not a secondary data. A secondary data for us will be any type of indicators put on the chart, and then we're extracting the observations from that. A secondary information more about the characteristics that we are coming up, identifying what is it that we are observing. So you kind of see my point. For the 220 bars 1 year, you might have so many points of observations that you need to make. So our minds just, cannot grasp that. And as a teacher, then I've been teaching already, for more than 10 years. This material, this is cycle, I think, like, I don't know, 37, 38. So you can imagine 15 sessions per cycle, 38 cycles, you do the math. Plus, like, not just one class, but so many classes. I actually recently calculated, I think I'm beyond 2,000 classes that I've taught for the last 10 years. So I've been around. I kind of met a lot of people, a lot of traders, a lot of students. It's really a problem for us to look at the chart and to digest so many data points. So our observation skills usually are somewhat lacking. There are people that come and they have a really good developed visual memory. And once you're in the business and you go through several millions of charts, you kind of start developing this. You kind of like remember the structures that were like you looked at 20 years ago, 10 years ago, and so on and so forth. But in general, our observation skills are somewhat lacking. So we need to be able to develop those skills of observations. And in this class, this is going to be a very subliminal message and almost kind of like unconscious way of how we're going to do this. We're going to practice, and that's going to develop more observational skills. As we practice, I'm going to be pointing to you as in WTC1 class, look at this, look at that. What do you see there? And then the second thing that we are kind of failing in our observations is the objectivity. Usually our minds are going to be attracted to the points of the observations that we've experienced before. If we have experienced, let's say, 1987 crash, which I personally have not, or let's say COVID decline, or 2007, 2009 market, or 2000 top into 2003 low, or 1998, Russian default, long-term capital default, or what else is kind of like, pretty dramatic there. I mean, you could just say like maybe like 2015, 2016, flash crash in 2010, 2011 shakeout, 2014 October reaction, those type of things. And of course, I could just go on back and forth on the history of the market. So our minds always going to be past transferring information into the current market. And if you're seeing supplies increasing and the spread is increasing, you might be unconsciously thinking about those times where you've seen this before. So there is a very non-objective way as to how we are actually thinking about what's happening right now. So in the key there is going to be to find that level of objectivity and not only to concentrate on certain interesting parts of the chart, but also observe much duller portions of the swings, ups and downs, and make assessment of their characteristics and the behaviors, and assess those in a very, deductive way. Deductions themselves also are pretty challenging, and I'm not sure why, but we really need to practice the way of how we take our data points from the observations and then convert them into the proper deductions. And the one thing that I'm observing as a teacher, going through, thousands of charts with students, is that the students usually fail to systematize the way of how they look at the chart. So attention either goes to the most current action, or it goes to something that is so dramatic, like, big shakeout, big volume signature, volume spikes, and so on and so forth. We have developed a much more systematic way of how we read the chart. And specifically with the bias game, I will be showing you exactly what we do. So this is going to be very, very exciting. And then the weight of evidence is just poorly developed as well. Do you give more meaning to the most current price action, to the last bar, to the last swing, to the last local structure, or do you look at the kind of like a global view, where you put the weight of evidence on that alone? Or maybe you look at the character with which the swings change. That is also extremely important, and you need to understand where do you apply, the weight of evidence, to what type of the analysis there. So all of that is going to be a whole premise, for this class, and this is what we're going to do. And here is a very simple exercise. I love this first class. I love this exercise because we are exactly doing the exercise on what we're talking. So here is our data. There are 6 bars, there are 6 price bars, and there are 6 volume bars. I want you to go through those and give me the observations about, all of the bars. And I'm gonna ask you specifically, to go to a specific bar. So hold on. And then we'll do the deductions. And then we'll try to come up with the answer is what is the next most probable move here? Is it to the upside? Is it sideways? Or is it to the downside? With this, how about we start making observations about bar number 1? What could we say about bar number 1, guys? Absorption of supply in bar number 1, indecision, okay? Close in low 1/2 of the bar, okay? What else? Stopping, back holding, okay? Eric, what is that? Demand and supply tails, okay? Both supply and demand tails, okay? Arrow spread. Franz, what is that? Arrow spread? Narrow spread, I'm sorry. Okay. Not much result on relative low volume from medicine. I would say that, yeah, and thank you so much, guys, for other answers. I would describe it like medicine said. Not much result on relatively low volume. We don't know the data points that came prior to that, but we definitely see that there is an attempt to sell. That selling is one of the lowest selling throughout, the 6 bars. And it doesn't really produce a lot, right? So some selling that is probably diminishing, limited result to the downside. So therefore, what is our deduction about bar number 1? Bullish, yeah. And maybe this bar is in the context of some kind of upswing, which we don't fully see. I like this. Juan is saying no selling pressure, so bullish. Yeah, and I think that's the main deduction, that like limited selling or no selling pressure. Suggesting what? Suggesting continuation to upside. So I would be making an argument that most likely we had some kind of upswing prior to that. Okay, bar number 2. Then if we had selling coming in and selling did not produce like a very, very heavy result for us, big result, then bar number 2 is what? What's going on with bar number 2? What kind of observations could we make about bar number 2? Expansion of result to the upside, large volume signature. So volume is increasing. So therefore, what is increasing here? Is demand increasing? Increasing demand, author is saying. Yes. Okay, great. Okay. What could we say about the supply? Is there a presence of the supply there, by the way? Yes. How do we see that supply is present there? Some small supply tail. Yes, right here. So we're seeing that supply is there. Is supply increasing? I would say yes, but it's really hard to say because the previous bar was kind of like, supply and demand. So we would have to kind of digest this. But I would say that, yeah, supply is increasing, and yet, and this goes into the deduction, what is happening with the result? Supply is there, supply is slightly increasing, but the result is most definitely a big, big increase in the result, right? So this is a significant bar for us. It overcomes the high of bar number 1 in a very significant way. Look at the extension there. Look at the close relative to the high, right? So the close is way above 1/2 of the spread, so bullish. Even though supply is there, it still suggests some kind of continuation. There is a small intra-bar reaction here into, again, the upper part of bar number 2, and then continuation to the upside. So what could we say? I'm sorry. So bar number 2, deduction is bullish. Expectation for continuation. Okay, great. Bar number 3. What do you guys see with bar number 3? Somewhat increased result on decreased effort. Volume drops. Better result, less effort. Ease of movement. Demand down. Ease of movement. Decrease in effort. Close of low. Volume drops. Climactic. Less volume but spread increase, so kind of ease of movement. Small supply tail. Continuation up. Okay, great. Volume is less, demand is less, upward result is more. Wide body, okay, bullish close, okay, yes. So all of that. Yeah, so in a way, the price is most bullish here in bar number 3. I would say that slightly the upward spread is increasing. Maybe I'm wrong here, but I'm sorry, ever slightly, I feel like there is a little bit of the increase. Close is better, right? So we are not going down, so there is a smaller supply tail relative to the previous bar. The open has this demand, tail, and suggesting that there was some kind of intra-bar selling, as we said. But this is definitely a much kind of like easier way for the price to move up. And the volume signature is diminishing, so demand is diminishing, supply is diminishing as well behind that. Ease of movement relative to bar number 2, as you guys said, and better close. The extension into the close is expanding. Look at how we are traveling here. This much above the high, this much above the high into the close. So definitely bullish. Now, I would say that diminishing demand might produce a suggestion for some kind of reaction. So this is going to go into the deductions, even though it's all bullish, but we're expecting some kind of reaction because demand is diminishing. Okay, let's go to bar number 4 now. What do we see there? Demand is being observed, possible warning reaction sign. Demand is exhausted, trading range, increased supply, indecision, increased supply, decreased demand. Okay, supply has entered. Increased supply, okay. Let's do this. Let's do a comparison of bar number, let's say 3 and 4. What do we see on the effort? Effort at 4 compared to effort at 3. So I'm going to say downward effort. We are kind of comparing downward effort to upward effort, but let's just kind of think that, we're comparing effort to effort. Yes, they're somewhat close, the same. Okay, what about the spread as a result? So we're going to think of the spread as the result. So spread at 4 compared to spread at 3. Less spread on bar number 4. And it's not just less. I would say it's probably what? Maybe like 25% less, right? So somewhat considerably less. So diminishing result. Effort is the same. Result is not only diminishing, but also a down bar instead of an up bar. Something interesting is going on. So for the same type of effort, we are now producing a down bar with the decreasing spread, suggesting the presence of what here? Opposing force, Betty. Yeah. Therefore, supply is present, and not only present, but it's also increasing. So we could say that supply is increasing, coming back to our previous comment that even though we were bullish, but we were expecting a reaction because of diminishing demand. Now supply is coming in, and now we're in the reactionary mode. And there is some kind of suggestion for the continuation of that. Okay, how do we continue this reaction? Let's go to bar number 5. What do we see? Very interesting bar right there. What do we see there? Demand tail, decreased supply, increased result, demand tail, close top 12 of Canada. Okay, long demand bar, significant bar, increased spread on decreased effort, okay, and so on and so forth. Okay. Look at how 5 interacts with 3. So the low of 5 touches the low of 3. Deduction here is what? Bullish or bearish? Okay, interesting. If we were, what would be more bullish or bearish? Let's say if 5, the tail of the 5 would be like this, it would stop here. Which would be more bullish, a shorter demand tail or a longer demand tail? Yeah, a shorter demand tail would be more bullish because we would stop in the upper, in the higher part of the body of bar number 3. If we're negating all of the bar number 3 and we go to the low, this shows that the test of bar number 3 is actually quite deep. I understand what you guys are thinking here. You're thinking like, but what about the demand tail that suggests that the demand has come and has produced, a significant intraday rally? That is correct, but it did so after touching the low of bar number 3. So we could be thinking like bar number 4 and bar number 5 is just basically a test of bar number 3. So what kind of test do we have? Is this test, is in the upper part of bar number 3? Or does it come to the 1/2 of bar number 3? Or does it come to the low of bar number 3? And kind of like goes through the whole bind that we have had? Then the question, comes to mind. If this is bullish, then why would the price go through all of the buy orders on bar number 3? Martina is saying negates the whole upper part of the rally. Yeah. So is it bullish or bearish? This touch of the low of 3, this negation of the whole buying of bar number 3 on the way up. Definitely bearish. So now we're seeing how from bar number 3, where we said demand is going down, we're expecting the reaction to bar number 4, where supply has come in, and the reaction started to unfold, and we said there's going to be some kind of continuation. What kind of continuation do we have? More bearish continuation. Interesting. Could we have a confirmation in bar number 6 that this is a bearish continuation rather than a bullish? I mean, if bar number 5 had a demand increase on the demand tail and it fails, what does it say about, let's say, the presence of the demand. What is demand doing? Demand is weak, Michael is saying. Demand is weaker, Martina is saying. Demand is going down, Betty is saying. Demand is doing nothing, Juan is saying. Okay, maybe there is always demand and there is always supply, right? Franz is saying demand is losing strength. I like that. Okay, so demand is weakening. And what is supply is doing on bar number 6? Is it expanding? We're seeing how the volume signature is just going down, right? So volume is going down, therefore supply is probably decreasing as well. This is a very interesting picture. Both demand is weakening and supply is not that high. Yet, and this is the key as we go into the deduction, what is the price doing? Close bearish, going down, prices going down. Is this the lowest close in the last 5 bars? Yes. Bullish or bearish? And you have to start thinking, what is my background here? I mean, the background was pretty bullish on the first 3 bars. And then on the last 3 bars, we're seeing more of the bearish background. We're seeing the background of the reaction that starts with just diminishing, buying power behind the demand decrease. Then we're seeing supplies coming in on bar number 4 and suggestive of the reaction. Then we see on bar number 5 attempt to reverse this reaction and failure to do so just because the test at bar number 5 is too deep relative to bar number 3. And then as a confirmation of all of that, we're seeing that 6 is just continuing with an idea that even though demand has come on bar number 5, we're still closing low on bar number 6. So therefore, bullish or bearish? Bearish. Here is an example of how we would conduct our observations, systematic observations, and then convert that into some kind of deductive reasoning as to what is happening bar by bar, and also what is happening with all of the 6 bars. So what's the next move? Bearish move. Continuation to the downside. And even though it looks more bullish, right? When you look at from 1 to 6, and you see that the predominant force is, in terms of the price action, is actually to the upside. But you see how the demand starts to deteriorate at 3, and then obviously is the least at 6. And then it just kind of like the weight of the evidence goes to a continuation to the downside, which it was. All right, a question from Gareth. Would you look at the aggregate volume of bar number 2 and 3 and compare it to 5 and 6? Yes, and we'll do that, Gareth, into the second part of our semester where we're going to do the swing analysis. We would be concentrating on cumulative volume for the swing analysis. We will be looking at this, and there are some situations where the cumulative volume, let's say to the upside on bar number 2 and 3, and also including bar number 1, just because it's part of the upward swing, might exceed the developing downswing cumulative volume on 4, 5, and 6, and yet that still might suggest, a continuation to the downside. Yes, and what's the likely next bar? It's to the downside. If it closed as green bull hammer, then would you interpret it differently? Martina, are we talking about which bar? Bar number 6? right? Bar number 5. Okay, it would be a much better test. So let me just clean this up. If we were to close, let's say somewhere here, this would be a much better test. So the spread itself will be smaller, right? So that would suggest that even though there is some selling, it doesn't really, give us a lot. I would be a little bit concerned about still a high volume signature from 4 to 5. So that still would suggest some presence of the supply. But let's say that not only the bar contracts, but let's say the volume signature drops, something like this. Then most definitely we will be thinking more bullish. And the quality of the testing we will be studying under the significant bar analysis. So I most definitely, kind of like welcome you to stay and to wait for that moment. All right, another one. Is 6 considered ease of movement in terms of the character? Yeah, I would say so. We see how supply has increased at bar number 4. We see some inability of the demand, so limited upward result on bar number 5. And then 6 is one of the lowest volume signatures, and yet the price still moves to the downside easily. So yeah, there is a definitive ease of movement here on bar number 6. But it's not, isn't it only ease of movement if it makes a commitment above or below a level, medicine is saying? Yeah, absolutely, yes. So we're thinking about the character of how it moves, non-diminishing volume signature. But medicine is absolutely correct. For the true ease of movement, we need to commit to the downside below the support, meaning that the close should be below the support. What about the intention behind bar number 6? Well, the bar number 6 intention was to just continue to the downside, it's doing so. It's not committing below the support, but I mean, this is the lowest close in the last 5 bars, which is significant. We saw demand first emerge in bar number 2, but the supply tail shows supply present. Can we say that overcoming to what is that? To the downside would be the real bearish indicator. Yeah, so Franz is asking if we commit below the low of this bar, would that be an indication of the continuation to the downside? I'd say even this support level is important because of the 3, because of the low of 3 and 5 as well, and now 6. Could we commit down? And I wish now that I would have the continuation of this chart. I didn't think that we would produce, this, you guys would produce these questions. But, the resolution of this was a swing to the downside that committed below the low of 3, 2, and even 1. So it was a downswing. What about the fact that all lows are at the same support level? Michael, do you mean right here? Ease of movement down, yes, but support is maintained at the same level. Very possible that we only have 6 bars. Yes, but what is happening here from 3 to 6? We kind of reading the force behind those bars. And if I were to close, if I were to do this is something that I often do with our exercises. How about this? I hope I can do this. Okay. No, don't do this. Oh no. Oh no. Okay. Let me do this in a different way. Trying to close this off so that you guys wouldn't see it. Let's just say we don't see. Oh, how do I do that? I can't control this. Let's just say that we don't see, and let me just try and do this. Yeah, I don't want to show you guys. Let's just say that we don't see bars number 1 and 2. Okay, just bear with me. I'm trying to erase your visual memory of this. Okay, we only analyze bars number 3, 4, 5, and 6. Does that look more bullish or bearish to you? We have initial thrust to the upside. Volume is going down and the price is going down. Yeah, more bearish. Yeah, because all of the gains of bar number 3 are done. And then 4 starts with the same effort. 5 has an attempt to go up, and that fails at 6, and at 5 at 2. So 3 bars are negating bar number 3. Yeah. Okay, let's go to the next exercise. I've just given you 6 bars with 6 volume bars, right? So seems easy, right? Michael, only decreasing volume, but what is the result of that? Because that's kind of like a very common mistake. The price could go down on the decreasing volume signature and start negating the bullish progress that has been done before. This is a big, big concept right there. Right, Michael? Could it bounce as well? I'd say that after 5 that tried to bounce, that was your bounce. What happens after that? Negation at 6. So I'd say continuation down rather than, attempt to bounce from 6. I mean, obviously, uncertainty of the market, anything can happen. But, 5 was that attempt to reverse. And again, that touch of the low of 5, the low of 3 on 5 was very important. Okay, well, guys, this is just 6 bars. What if we are going to have more data? And you kind of see how this problem just multiplies itself in the sense of the difficulty of it. Yeah, a forest, Shamshir is saying. Yeah, we just looked at one small branch of a big tree. Now we're looking at the forest. There are a lot of trees here. There are a lot of leaves, and we have to analyze this. Okay. So let's do this. What do you guys see? What are your observations about this chart? How about this? Let me ask you a different question. Have you caught yourself self-talking? Maybe like some voice is just saying like, ooh, look at the first bar. This is the highest volume signature. Did you catch yourself thinking this way? That's how our minds work. Our minds are trying to go to something that is like, ooh, this is exciting. I've seen this before. Let's make the analysis based on that. Okay, Eric is saying I would look at the trend lines first. Okay, so what is the trend? Slow rollover downward. I want more definition of this. Bearish into a trading range. That's pretty much what I wanted. Yes. A downtrend that goes into a trading range. That's our background. Okay. And we are discussing now more everything at the kind of like higher level. What is the next thing that we should be thinking about here and observing? We know that we are in the downtrend going into the into a trading range. Selling climax, phase, and let's determine if this is accumulation or redistribution. We already know what this is, by the way, Gareth. What is it, guys, this trading range? How do we initially pronounce the bias for this trading range? Definitely not accumulation. Redistribution. To be confirmed or to fail. Why is that, by the way? Because of Martina? Yeah, because of the downtrend. Yeah. The background is undeniably down. So if the background is to the downside and we're coming in into the trading range, our first assumption is the bias assumption of the background, which is to the downside. So redistribution, to be confirmed or to fail. Now we go into the analysis of the confirmation or a failure. Okay, so what is the next most important thing in the structure for us to notice? Phase C, not necessarily. What else? Volume diminution. This is, for those of you who are not aware, you kind of look at the volume signature. Volume has nothing, it's going to be very, very tricky here just because this is an S&P chart. And for those of you who guessed intraday S&P chart, where price spends most of the time. Okay. There is more important things for that before that. Change of behavior, Michael is saying. Okay, so Michael, where is the change of behavior? Could we call this rally a change of behavior? Before that? Okay, yes, we definitely would say like this smaller rally or this one is a change of behavior coming in into the trading range. But within the trading range, there is a rally, which is the best rally, the one that I've highlighted in yellow. Okay. Betty is saying change of behavior, but not a change of character. Very interesting statement. Change of behavior, but not a change of character. What does it mean? We just tried to produce the best rally. And how was that confirmed? Did the price stop somewhere in the upper part? No, no. Okay, so we are not necessarily confirming this change of behavior. No confirmation. Okay, but there was something else that was so important that nobody's talking about except for one person. Maybe I've missed that. Franz was talking about this. In the construct of the downtrend, where are the pockets of supply where the price should overcome? Usually those going to be associated with what? With some kind of breaks, right? So when we look, the breakdown area, Brian is saying, okay, we have a thrust to the downside, then we have some kind of weird downsloping triangular wedge consolidation. Something like this. Sign of weakness, last point of supply. And the break happens right here. This is the last break in the downtrend structure. So we need on the bullish side to overcome that. Do we do it? What's the result of all of the attempts, especially on the change of behavior rally, to overcome that level? No commitment, failure, no can do. Yeah. That's it. Do you see how quickly some puzzles could be solved? So what does it mean? Bullish or bearish? Bearish. Could we find some kind of confirmation of the bearish behavior in the trading range? Now that we have dissected the whole structure from the downtrend to the trading range and see like the main three things that we went through. The background, the current environment, supply zones, change of behavior rally, possible commitments or non-commitments to the upside. That's it. So when you start thinking about like, oh, what's the most important thing? Phase C. Not necessarily. Phase C, if anything, have you seen me do any labeling here? Because there is kind of like this mystery about the schematics. Well, I mean, I've created certain schematics. I put them, out there. People are taking that and then they're saying like, oh, I'm gonna follow the schematic, to the last point there. All of those ups and downs. When I was drawing this, I wasn't even thinking of how the structure was unfolding. It was very much unconscious way of how I drew that. It's just a little secret. Labeling, as we will study in this course, is probably least important for the bias definition. You could use some Wyckoff events and you could say, yeah, I see the stop in action here. I see that secondary test has a lower low suggesting some weakness. I might say even that maybe this is a preliminary support. And then this is a sell-in climax on some climactic or local climactic bar. This is an automatic rally, secondary test as a minor sign of weakness. And then we go into a typical phase B rally, which has, deep reactions. So it's kind of suggests like I'm phase B rally. Okay, then we go into, reaction after that phase B. Okay, but is there anything here that we could say that, oh yeah, it's bullish? Well, for the bullish case scenario, we need to see some kind of rally that's going to overcome the supply zone as a sign of strength, and then back up and then continuation. So that would be a change of character. We don't see that. Sign of strength will act as a change of behavior. We don't see that, at least yet. And the rally that we have had here in the middle of the trading range, yes, a change of behavior, but is not being confirmed. Everything is being negated. So still bearish. So how would we trade this? Can anyone tell me how would we trade this? Let's just say that we are thinking continuation here. Wait for a confirmation. Eric, what kind of confirmation do we need? Wait for the upthrust on low volume. We have a local upthrust here, Martina. So should we do that? Short the top of the range or sell last point of supply. Well, we are already not at the top of the range. We are where we are, right? So the market is like that. It doesn't give you the second chance opportunity, at least not that often. So no trade then. Martina is saying, you wanted an upthrust, Martina? Here's a local upthrust. You could create that trade. Okay, so let's see what else. Short when it breaks below the support line. I like that. That comes from Hayward. Okay, you have multiple support lines here. Which one? That's the question. Wait above the trading range. Okay, Martina, I'm going to put you on the wait list right there. Michael saying we stop above the upthrust bar. Okay. Jefferson start short trade on this rally with stop above the range, add shorts on confirmation breakdowns. That's probably the most sound strategy that I would employ. Steven is saying you need a reversal to set a stop. Okay, so for instance, a bar that is reversing the latest price action, let's say a down bar like this. could act as a point of entry. Upthrust would act as the stop loss, and then, as Jeff was saying, confirmatory ad, right? So 1, 2, and 3 positions could be open, but we want to look into the structure right here as we go down. I would rather open the positions on the rallies in the downtrending environment than just to wait for the breakdowns. I think number 2 could be a breakdown, but number 3, just because it's so global here, I would rather see how this develops. What else? Okay, you wait for a confirmation in volume and spread to the downside. Volume is low, smart money is not in. Wait, you don't short support. That's not true. In certain instances, you want to short the support when it breaks, especially in phase Z. A sell over the large down volume bar, just wait, no trade. Okay, so for those of you who are waiting, please wait. I would say that this is a really good plan for us. So I would just gonna take, you could potentially, short it right here on the last bar. You could develop this short in a more conservative way, right? So you don't have to short at the close. You could short as the price goes through this level. So this would be my point of entry number 1. Point of entry number 2, break of the next support. So please, I already forgot whoever was talking about we don't short the support. Here is shorting the support. I think this also is okay to short here just because it's so close. Here, we need to see how the structure is going to develop. Is it going to stop here and then rally? So maybe we could short again here. Or is it going to kind of like break it through and maybe we could short somewhere here? So we'll just have to see. But the first 3 entries are pretty evident. Let's see what happens. Okay, so point of entry number 1, yes. Point of entry number 2, yes. Point of entry number 3, yes. So 1, 2, and 3, we are in. For those of you who are waiting for the price to get back, no trade. Next one, remember how I said, like, let's look at what's going to happen with the structure here. See how we see this volume spike? Suggesting what? What does this volume spike suggest? Someone is buying. Brian is correct. Support, stop in action. Hayward is saying climactic action. Yes, it's climactic action just for a smaller trading range, right? So we're basically saying like, oh, there is some kind of emergence of demand. Let's just see what it's going to do. And that is suggestive of some kind of smaller trading range. And this is where our point number 4, entry number 4 could have been. So for instance, I don't see big rallies right here whatsoever. So here is 4, here is 5, here is 6, and then we are in the freestyle, in the freestyle drop right here. So let's just say that we are in the position right here. Okay, what do we do next? What do we do in this structure right here? Do we close positions somewhere, maybe prior to that? Are we completely out or what? Our stop loss was here. We are moving the stop loss like this. Could be hit here, but not necessarily. If we stay in, here's our next stop loss. Here's another point of exit. You could have maybe 3 units out, -1, -1, -1. So you still +3. What do you do? You could wait for a change of character. More supply, still need demand, close some short near low, keep some shorts. Okay, wait. Would continue to exit position on higher lows. I'm sorry, on higher highs. Jeff, not liking that. I mean, like, why would we be exiting our positions on higher highs? I mean, like, if it hits our stop loss there, maybe yes. Take some money off the table. Eric, we've done 3 units, right? So we are +6 here. We are -1, -1, -1. We are +3 now. Don't like the shortening of the thrust. The rally looks weak so far. Okay, stop. Too much chatter in your heads. All right? The way how you should reply to me is, why don't we do an analysis here? Steven is suggesting, where is the target? Okay, so yeah, we could come back to that and kind of like, develop that idea as well. So yeah, that's a legitimate question. But in your heads, again, I'm saying this because this is why we're here. Do you see what you guys are doing? I'm asking you a correct question. What are we going to do here? I'm not suggesting that we discuss the exits, that we discuss the targets, that we discuss anything else. I'm asking you, what do you do here when you see the new piece of information? Is that starting to compute? Right? Here you go. All right. Analyze, Gareth is saying. Of course, that's what we do here. We analyze first. Okay, we analyze in the same way like we've done it before. What is the background? That's our question number 1. To the downside. Why the pause? I was too dramatic with this. Okay. All right, guys, relax, relax, relax. I'm just making a point. Okay, background is to the downside. Okay, so what's the next thing that we're gonna, look at? We're gonna look here. We looked at the trading range, right? So let's look at the current trading range. Where is it? Probably this, down sloping. Okay, what is our initial assumption about the bias of the trading range? Brian is saying redistribution to be confirmed or to fail. Okay, really good. Okay, now let's collect the evidence. Where is our last big breakdown to the downside? This selling supply. So we have it most definitely here. I would say this is a very important bar. Do we overcome it? No. Bullish or bearish? No commitment above. Bearish. Let's look at the all of the rallies here. Do they excite you guys? Are those changes of behavior? No. We don't even have a change of behavior. We have a local change of behavior, a small change of behavior. But I mean, like, look at this reaction. Look at this reaction. Look at this reaction. These reactions up are even smaller or somewhat the same. So just continuation. There is nothing else. So our +3, not only staying, we probably should be thinking about adding to the position. Jeff is saying weak rallies excite me if I'm short. That's how we feel here. Yeah, we're excited. Should we add to the position here? If yes, then how? What is the tactic here? Don't forget, we're +3. All right, guys, we gotta go quicker. Quicker. Think quicker. You could add right now. Yes, +1. What else, Martina? Where else could we add? Move stop loss down. Okay, well, our stop losses are at the top. Our stop loss is right at this place right here. We could move it here, just kind of like on the background of weaker rallies. We could do that, but I mean, like the true stop loss should be here. We are trading down, so the stop loss could not be under the trading range. even though it looks down sloping trading range, but it seems there is no change of character, still downtrend. It is still downtrend, yes. Okay, I'm gonna do this for you. All right, add here, so +1, +1, and that's it. That's how simple this is. Okay, what is, I think the more important observation here is this. What is supply doing in this area? Is it increasing or decreasing? Increasing. So sellers are in control. And we kind of could see this from the character of the drops to the downside, right? I mean, regardless of where they stop initially, they still have the character of this very, very aggressive bearish sellers pushing the price to the support type of reactions. Then they start breaking supports in a more meaningful way, and then even more. But then what is starting to happen here with the supply? Decreasing. Okay, so that's an observation. What is the deduction out of that? Is selling being exhausted? Selling is being exhausted. Plus, we are still in the downtrend. What does it mean? What kind of deduction could we produce from this? Selling is getting more exhausted, but we're still in the downtrend. And demand is still not that present. But he's saying vulnerable for a rally. Prepare for the support zone from Steven. Next leg will be less aggressive. I like that from Franz. A change is coming. I like that from Eric. But it's still not here. Okay. So we're thinking that maybe there is some kind of continuation, but maybe the last leg as selling is being exhausted. Okay, let's see. Here's what happens. So did we get into the position? Yes. Yes. I think there was some +3, right? We said. Okay. How's the selling on the way down? What do we see? Supply is diminishing. That's number one. How's the downward spread? Compare that to this downward spread, or this one right here. Diminishing. Okay. So what could we say? What deduction could we produce from this information? Deterioration of selling. Okay. What could we say? What's an expectation as this develops more? Expect a rally, Michael is saying. Okay. How would the rally look like? How would it start? How would the rally start? Francis saying reversal. Okay. What else? Short covering. What does it mean, Michael? Short covering. How would we see short covering on the chart? Increase of the volume. Correct. Specifically for the demand, what's going to happen? Demand is going to increase, and all of that is going to produce a change of behavior, which is going to lead to what? To a trading range. And in this trading range, we still go at the same things: bias, timing, character. Okay. Let's see. Where is our first bar that we could say? Give me the timestamp. What is the first bar where we could say, yes, we see that the volume is increasing, demand is increasing, and not only that, we are producing some kind of upward result, the beginning of the change of behavior rally. Everybody is saying around 12 o'clock. Yes, right here. This is the bar. This whole rally is the change of behavior. Even by bar number one, you could make that judgment. Here's the volume signature for that bar. Please note that the previous volume signature of the same sort just was a stopping action. There is a small trading range right here with its own phase C, with its own spring, and so on and so forth. But this was the point where we should have closed all of our units that are left. Okay, so as you could see, we just bombarded with so much data, with so much information, where we need to know how to conduct those observations, how to systematize those observations, how to ask the correct questions. And a couple of times I caught you, with you thinking about more about trading rather than analysis, or maybe looking at something else, some kind of labeling technique and so on and so forth. This whole, Wyckoff voodoo and all of that stuff. It's so ironic that I say all of these words. You have to go through the whole cycle of, learning and teaching to understand the meaning of this whole schematics. Those are really about a possibility, but not about the actual roadmap. There is a possibility that the price will behave in this schematic way. There is a possibility that it could behave in this schematic way. What's important is the truth of the chart, and the truth of the chart is in true observations and correct deductions. Then you could label. And that's it. All right. Okay. Couple of questions from Jeff. I'm confused with stop loss set above the 41.46 level. Wouldn't we still be in this trade short? Are you frequently closing trade on the first reversal sign or at the triggering of the profit stops? Okay, so let's answer the question on the stops. So we said, where's our original position? Was right here, right? So here's our first stop loss, right? Then we move it right here, here. And I would probably even keep it a little bit. Then here. There could be an argument that you are scaling out here, right? So your stop loss either here or here could be hit. So this is going to be -1 here. And again, you could be hit here, so -1. I would say this, let's just suppose it was not hit. And then here, so this is kind of like, the question that is not necessarily asked correctly, right? So are you frequently closing the trade on the first reversal sign? If it comes with the conditions that are showing deterioration of selling, then you'd better close on the first bar, Jeff, where demand is coming in and is so pronounced and the result is so pronounced. But if there is no immediate deterioration of selling, then that's going to be a completely different trading tactic. Do you see that? And I mean, obviously, I would have to show you an example here. So for instance, on the way down here, the picture is slightly different. So the stop loss would go just basically staircase. So here is -1. Then your next stop loss is going to be here, -1. And then your probably exit is going to be complete exit somewhere here. So a completely different technique there. Why? Because, well, here we also see some deterioration, but this is like from one leg to another to another. why we were paying so much attention, and I was telling you what's happening with the spreads here. What's happening with the momentum? What's happening with the supply signature? Do you see that, Jeff? So under different conditions, you're gonna see, you're gonna, kind of like exit in a different way. Yeah. When selling is so exhausted, you expect almost immediate run up to the upside. And in a way, this, July, August rally that we had in the market is that type of rally. It just was so oversold and selling started to exhaust itself. So then it was a pretty easy call for us to say like, oh, we're going to have the best rally. And it kind of happened exactly in that way. All right, let's go to something else. Ooh, 521. Well, that was good. By the way, for those of you who are interested in kind of like in-depth chart reading, and you kind of maybe could sense where I'm going with all of this, but this is a very unique product that we have, Wyckoff Tape Reading Lab, and I conduct those sessions, live sessions on Mondays with William Reardon, who is a colleague and a dear friend, and we kind of we kind of enjoy it so much we even forget that we are in the classroom. And obviously both of us are just such chart nerds, like we love reading the chart. We love reading all of those small nuances and details and things. So pretty fascinating stuff. If you'd like, sign up. I would advise to sign up maybe if you're a beginner, intermediate student, or intermediate one level, maybe after WTC2, because I'm going to give you a lot of those techniques that you could come to the tape reading lab and you could like use them right away. Plus, this is not a class. This is more of kind of like, I don't know, like almost like a performance where you're just an observer. So we don't ask you questions. We don't look at your comments mostly. And we kind of in our own space. There is nothing that you could ask that would be answered. So that's a downfall right there. But at the same time, that's what creates that uniqueness. So check it out. We have some free sessions of those classes on our YouTube channel. So check those out before you sign up. Bias game. So we have only about 7 minutes. So I'm just going to say this. We'll talk more with the students who signed up for this class. I'm looking forward to working with you guys. I just feel like, again, I'm rested and I just want to get into it, go deeper. But one thing that I want you to know right away, whatever bias game you are on, and as a homework, it should be 150 to 152. Keep the scores of your bias game solutions. It's going to be very, very important. And I will show you in the next class how to do that. I'll, show you the post bias game analysis that I want you to conduct. All right, so here is a bias game number 147. Yeah, we're definitely behind. We're not going to go through all three of them. So let's analyze this. What do you guys think? I'm gonna give you maybe around 30 minutes. Oh, I'm sorry, 30 seconds. And you go through the chart, make observations. Let me know what you think about the bias. Is this an accumulation or a distribution? If you already done so, as Medicine stated, then just, Medicine, try to find some elements of this chart that you have not paid attention to before. Let's just see. Okay, answers are coming in. Accumulation, distribution, distribution, distribution. Distribution, okay. Distribution, accumulation, distribution, 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 accumulation, accumulation, okay, accumulation. So majority, I feel like, we were on the distribution a lot. So I'm going to kind of work with the majority. What is the major, like if there is one thing that you could tell me from, the analytical point of view, what is the one flashcard idea about the distribution? What is it that you've seen that tells you that this is a distribution? Change in phase B. Peter, I think that you're talking about this reaction. Am I correct? Sell off on the last upthrust. Martina is saying as well. Yes. High volume comes from above right here. So we're looking at this volume signature. You could also combine it with this one. Okay. Upthrust after distribution. So we are upthrusting, and then we see a very, very strong move to the downside with a lot of volume signature. Lower highs afterwards from Eric. Okay. The rally which fails to reach the sell-off, upslope in trading range, and last point of supply now. Shortening of the upward thrust. Yes, let's indicate that for sure. Shortening of the thrust. Okay, a high volume coming in on the retest of the breakdown. Okay. Where is that breakdown, by the way, Gareth? What did we break? Let me ask all of you. Like all of you, not just the ones who said that this is a distribution, but the ones that said that this is accumulation as well. This is a very, very important point. Let me read this again. Gareth is saying also high volume coming in on the retest of the breakdown. I'm not going to go into the volume signature right now. I just want you to answer this question. Where is the breakdown? What did we break? The support zone at the high. Okay, so this one, Eric? Yeah? We've done it here, 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 we've done it here as well. Those are local support zones that most definitely will be broken at some point. Break of the upsloping trading range. How about this? I don't know what the upsloping trading range is. I'm looking at this trading range. This is my support. Support number 3. This is support number 2. This is support number 1. Was there anything broken there? If briefly goes below the previous low during the big reaction. Okay, this is the bar. All right, we found that breakdown. Okay, what was the result of this? No confirmation. How would we call this? Non-result, because this is a non-result to the downside. Non-downward result. A spring. Okay. No real result. Support holds. Do you guys see? Why was the mind attracted to the idea of the breakdown? Because of this. This looks ominous. This is kind of like this mystery on the chart. What's happening there? Lots of velocity, Yannick is saying. Wall of worry, the opposing force coming in, climactic. Yes, just a lot of supply, a lot of selling that is coming in. This is like the largest selling that we could see. And this is the largest result. The only question, and this is the flashcard solution for this bias game, the only question that we could ask here is, with all of this supply that's coming in, and with so much aggressiveness of this reaction, What is the result? Did we break support here? No, we definitely did not break the first two supports. Okay, why don't we do the upsloping now, right? So I would say that this is its own formation. I wouldn't maybe like include it here. I would probably be thinking that this is a buy-in climax because of the climactic run right here. And I would say that could this be an automatic reaction? And I think maybe I have labeled it differently. So definitely an upsloping structure. Reflecting what, by the way? Someone said this before, reflecting some kind of outperformance, right? So we see that the secondary test rally, the character of it, what do you think? Pretty good, yeah. I mean, demand is most definitely not that desirable, but the reaction after that does not really is that aggressive. The last two bars, there is increase of the supply, but there is demand behind this because it stopped prior to the support. So it still suggests some kind of rally. The rally overcomes the resistance, and then it's only right here. This is where we're starting to kind of be a little bit shaky, and then the local break and this part of the reaction. If we would break this reaction into two parts, one and then two, what could you say about part number two? More bullish, shortening of the thrust, less result, diminishing downward spread, diminishing volume signature, diminishing supply. So in reality, where is the most aggressive selling that is happening? Right here. Beyond that, yes, there is some selling, but it's almost like, a continuation of that selling with the loss of momentum and with less supply coming in and with some demand that is coming in on the spikes right here, suggesting the rally. How does the rally actually unfold? Where do we come? We come to the previous breakdown bar right here, which is the most important bar. And we cover this whole thing. And then we fail. Okay, how do we fail is important. We should compare this to this. Now we're talking about the local structure. Let's compare. What is the, let's say this is 1 and this is 2. What is the downward effort of 2 relative to the downward effort of 1? And just think cumulatively here, right? So cumulative volume signature, cumulative result. What could we say? Less effort, less and less downward result. You guys solved it. Okay. Downward result at 2, less than result at 1. So on the second reaction, there is less selling that brings us to the lesser downward result, to non-expanding result to the downside. And actually, we stop. I mean, our lowest close was right here. Here we have multiple closes at this level. Here we don't, so high or low. So result is definitely more bullish on the second reaction than on the first one. So is it bullish, short-term bullish, or short-term bearish? Bullish. Okay, and here we are. There are multiple ways of how we could, come to the solution on a bias game. Again, I will be talking to you about sequential analysis. We have not done that. I'm going to be talking to you about the flashcard analysis. We apply the flashcard analysis just because it's quicker. There could be just even one idea that defines the whole thing. One idea to me here was we can't break support. And then quantifiable analysis, this is a little bit more complicated. We will cover this as we go with our classes. And here is the solution. So every time we present the solution, we give you our analysis. And we give you our labeling, we give you our main points. This is a sequential analysis, so we go from, we create the Wyckoff story from left to right. On the background, there is an uptrend. Change of behavior is not that significant. It doesn't cover the whole climactic run, so still bullish. Secondary test is still favorable, but shortening of the thrust suggesting that there might be some kind of reaction. Phase B secondary test is still at the higher low, so still bullish. Overcoming upthrust here, and again, shortening of the thrust suggesting a reaction. Now we have to see what kind of reaction we're going to have. Reaction comes, this is the most aggressive reaction. Divided into two parts. We're seeing how selling comes only off the top and then it stops. A rally is capable to come to the breakdown point, which is somewhat significant. And then the next reaction as the test of the same magnitude is of lesser selling quality on diminishing supply. Still bullish. Know it all bar. So students in this class sometimes complain. I'm not saying all, but some students would complain to me and they would say like, you always do the bias games where you kind of doesn't give us this type of bar. If I would give you the chart up to this point, to this 3 bars, what would the bias be in your mind right away? If I would stop the bias game right there, Michael is saying it would be too easy. Why would it be too easy, Michael? Definitely bullish. Sign of strength, Gareth is saying. Yes, those are sign of strength bars. Expanding spread, momentum increase, and increase in the demand. Know it all bar, Francis saying. Yes. It would be too easy. I want you to come in your real trading to this point, and I want you to analyze what has happened prior to that. So as you develop the picture about the conditions of which swing up and down, all of the tests, you are creating certain perception of what the bias is based on your analysis. And then the know it all bar comes, and what does it give you? It gives you that confirmation that you could act now. And that's the whole purpose. If I would be given know it all bar, people would be just concentrating on that, and then they would learn nothing. You need to learn how to read the chart. That's the purpose of this class. And that's what we're doing. Know it all bar in real life, in real trading, is a gift. It kind of tells you like, yeah, I'm bullish. It kind of tells you I'm bullish even if you were bearish. Because the logic, the counter argument, by the way, that we've also inserted into the bias game, and again, we'll talk about this in the upcoming classes, is going to be screaming at you and saying to you that, oh my gosh, I thought it was a distribution, but why is there no follow through right here? Why is there some testing here? And how come the know-it-all bar is starting to occur? So in this area, if you're saying prior to this that all of this is a distribution, you will know instantly that you are incorrect. And if you know that you're incorrect, what are you going to do? Safian is saying, I'm convinced. I need to learn this stuff. I'm signing up for part number 1 classes as a new student. I'm looking forward to that. You know, let's work. Looking forward to working with you, Safian. Change your bias, Michael is saying. Yes, this is the moment, this is the time where you just, if you were thinking that this is a distribution, especially after this reaction, I totally get it. Absolutely, totally get it. That we could miss this. I miss that stuff. I mean, like, I've analyzed so many charts. I went through several millions of charts, analyzed, and yet I make mistakes. So this point right here, if we are going through the correct logic, this should tell us we were wrong. We need to switch the bias right now, and this is the point of where we could open the position. And we would be in a good place. There are a lot of trades that I've done where I was incorrect on my initial bias, but then this mental capacity to switch the bias, which is extremely important skill for a trader. You know, don't dwell on your mistakes. Don't dwell on the previous bias. If you see the change, is going to make you money. Another question from Robert. Is it too late to register for WTC1? No, we just had the class yesterday. So please do register like right now and then go and do the homework for the next week, which is the article by Jim Forte on anatomy of the trading range. By the way, for those of you who are not familiar with that article, the best article that was written on price structural analysis ever. Even Wyckoff did not do it in that way. Well, just because, you know, he didn't have any definitions of sprints or even phases. Does that surprise you? Yeah. Wyckoff did not develop phase analysis. Wyckoff did not have the definition of sprints. He had the definition of a shakeout and terminal shakeout, and that was it. He was a much, much more pure price and volume action than structural analysis. Yeah. Okay. All right. I already did bias games number 150 to 152 in the past. Can you give me some bonus ones to do? Made it sense. So the current bias game, obviously, is something to do. That's number one. Secondly, have you read David Wise's book, Trades About to Happen? If not, I want you to start reading this. No, you have not. Okay, so please start reading that. And I think that we're going to have presentations by students on different chapters of that book. I want to come back to that format. It was very successful. We really enjoyed it. So let's read the book together. Plus, David was a colleague and a friend in the last year. You know, I spent a lot of time with him, just doing the private sessions each week, and we got, you know, pretty close through those meetings. And it still bothers me that he passed away in the way that he did, and obviously I start thinking about Hank and start getting emotional. But you know, what are you gonna do in life? But he left such, both of them left such an amazing body of knowledge. So let's read David's book. Yeah. Okay, where do we get the articles for this week's homework? From Gladwell, from Jeff. Jeff, you will find them on the class page that we've created for you guys. I believe that Nancy will be sending instructions tonight. So once you log in, you will be able to see 2 articles, and you will see the slides from today, and you will see also the homework slides, and you will see the video for this course. Peter is saying David Wise was my main mentor years ago. Yeah, again, I mean, like, he mentored a lot of traders, a lot of Wyckoffans, because he liked that private coaching format. I think that was his way of connecting, you know, to the community, to people, and I was one of them as well, like you, Peter. What was David's last name? From Michael, David Wise. And you could go to our website, and under the free resources, we have the book. And actually, let me just even show you this. So under the free materials, here's the bias game, by the way. So go to the bias game. Which bias game are we on? 154. Okay. Under the resources, here's that anatomy of the trade article by Jim Forte. And then under the Wyckoff books, books on the Wyckoff method, this is the one. So the first one is the 3 skills of top trading by Hank, and then Trades About to Happen by David Wise. Those are the two main books on the Wyckoff methodology that I would consider that you have to read. You could read Anna Skulin's book on volume, but there are some, I don't want to say inaccuracies, but some semantical discrepancies that I would prefer students not to go into. Reminiscences of the Stock Operator is a must read, but that's kind of like a on the plane read. Richard Arms, something of interest, but not necessarily for this level. So Hank's book is for WTC1 and David's book is for WTC2. So let's most definitely read that. Okay, I think that's it for today. I think this is where we're gonna stop. So we're gonna start with the 148 game. So let's just change this a little bit, and I'm gonna reflect this in the homework charts. Maybe we'll go through 3 of them. I don't know how we're gonna catch up, so we'll try. Okay, so what else? Okay, thank you, Jeff. Brian is saying she flips the minion of the buying and selling kind of confusing. Exactly, Brian. See, I can't, like, as a teacher, I don't want to go into those type of discussions, but that was my main point there. Yes, yes, and I agree. Everything else is great. So yeah, if you want to read Anna, yeah, I would suggest that. Are you familiar with Ruben Chavez? No, I'm not. It seems I struggle to recognize the bias on the last exercise. I've just finished part 1. I just wonder if I do not capture part 1 enough. No, not necessarily. I mean, like, I did not give you, a sequential type of the analysis or flashcard analysis or quantifiable type of the analysis in WTC1. This comes from who, if I pronounce your name correctly. So WTC2 is exactly where I want you to be. In WTC1, remember that systematic exercise that we've done in the second month? The purpose of that exercise was multi-layered. And what we wanted to do with that exercise is to develop the power of observations. That's number 1. Then subsequently, the power of the deductions. That's number 2. And then to understand the price structure and also to introduce a little bit of trade management and tactics. I cannot come to this level right away with you guys, so it was kind of logical for us to do exactly that. In this class, we're going to go into the detail of how is it that we analyze, what's the sequence there. So correct place. Cool. So looking forward to working with you. Much more drinking from the fire hose for the WTC2 from Martina. Indeed. Yes, that's kind of like a very common expression from students, drinking from a fire hose. Again, I look at this not as the complaint, but as a compliment. I understand there is a lot of material, even if, let's say, like, 25, 30% of it is going to be cemented in your mind. I'm pretty happy about that. Betty is saying, I'm so glad I've registered to WTC2. Betty, I'm looking forward to working with you. And the last comment here. Brian, the course will focus on training for execution. I'm concerned will be mostly reading, not that it would be bad, but would like to be reassured that it will focus on entering, scaling in and out, risk management, and etc. Brian, we definitely gonna go through trading tactics way more than in WTC1. So that's for sure. Our primary concentration is going to be on bias and timing. But we will have a lot of action sequences during the classes where you will be forced to think about, buys and sells. Also, the whole significant bar analysis is going to be built into the, like, not just tactical scenarios, but trade management itself, where we will be discussing, okay, well, is this the bar where we would be entering? Is this the bar where we would be putting the stop loss? And how we would be moving all of that. So for sure. Eric is saying, I need to work on my observations. Absolutely. And that's why we're here, Eric. So looking forward to working with you. I feel like it's illustrating my inadequacies in trading, doing WTC2, Martina is saying. It's really good. Looking forward to working with you, Martina, for sure. Okay. Okay. Are there any specific tactic strategies for options trading from Hayward? Here and there, I will mention this, Hayward. It's definitely not the class where we would be discussing those in details, right? Because we still don't have those classes on options. But because I do trade options, sometimes I would be giving some comments on this, but it's not going to be that, consistent. Francis saying, don't get discouraged if at first the bias recognition is hard to grasp. The more you work on it, the more it becomes clear. And Franz knows what he's talking about because he's taking probably cycle number 8 or 9 or 10, something like this. I mean, like Franz has been with us for a long time, by my side, helping out with anatomy of the trading of a trade, helping out and leading right now the process group that we have, developing, process 3.0, which we probably going to launch into next summer and so on and so forth. So take it for what he says. Okay. Brian, just write me an email if there are any concerns and we could discuss it over the email. Just send me a paragraph, okay? Don't send me a whole page. I'm just wondering from Wilson, we won't be using any indicators like a rate of change, OBV, and etc. What we do, or what I do throughout these two classes, two courses, WTC 1 and 2, is I want you to build a foundation, Wilson, understanding how the price moves and why it moves in this way, and then obviously understanding like what it means in terms of the timing and execution. Beyond that, you could most definitely add whatever you want, understanding how the foundation works. So that's my preferable approach to indicators. Do I use indicators? Some, right? So I most definitely look at the relative strength ratio, not the RSI, but the relative strength. So this is comparison of assets for the performance purposes. I might look at a moving average, but I don't have to. I see it on the chart even without putting it on. I could put some momentum indicators, but I don't have to. I already see all of the momentum characteristics as I look at the chart. I could look at some oscillators, but I don't have to. I already see where there is a short-term and long-term overbought, oversold conditions. And this is what we're learning, to see all of the secondary data that comes from the indicators on the chart itself. And that's kind of like the whole idea behind using just the primary data, which is the price, volume, time, and sentiment that we derive from there. No worries, Ali. And yeah, we have a lot of international students. If my English is somewhere like poor from time to time, I sometimes get tired and my English is not that great. Just ask me a question again and I'm here. Yeah, I'm here. All right, no worries, Ali. Okay, I think that's it, guys, for today. Wow, 5:55 again, after 5:30. But it was important to answer all of your questions. I'm looking forward to working with you guys, especially the ones who already signed up or going to sign up. For those of you who are guests, you're welcome to watch, all of our videos on YouTube. We have so much free material. Go to our website, do the bias games on the weekly basis via Twitter or on our website. Do something. Make this step forward by educating yourself and not necessarily, kind of like hoarding the information or just, relying on the knowledge and skill that you have right now. Develop yourself into something meaningful. And with that, really good, point to end our discussion in our class. I'm looking forward to working with all of you, those who are going to come to this class. And until next Tuesday, thank you guys, and bye-bye.